Good morning. This is Japanese Economic Review Channel. Looking back at yesterday, Friday, July 31st, the Japanese market staged a historic performance. While the Nikkei recorded its sixth largest gain of the year, adding over 2,400 points, the session was defined by a, quote, tale of divergence. Under the hood of this aggressive AI-driven surge, a fundamentally weak broader market was masked by hawkish FX interventions and a negative advance decline ratio. The final figures from yesterday were remarkable. The Nikkei 225 soared by 2,494 points to close at 64,362, even briefly reclaiming the 65,000 level during intraday trading. Topix also returned to the 4,000-point threshold for the first time in 4 trading days, finishing at 4,003. This massive rally was supported by heavy trading, with value exceeding 10.1 trillion yen. The catalyst for yesterday's opening gap-up was the performance of U.S. tech on July 30th. Strong cloud earnings from Microsoft eased global AI anxieties, leading to an 8% surge in the SOX index. This global tailwind triggered an immediate and aggressive capital inflow, directed exclusively into Japanese semiconductor and AI-adjacent equities at the morning bell. The session was a battle between massive upward pressure from the AI trade and downward macro realities. While regional momentum in South Korea's KOSP boosted sentiment, suspected government FX interventions spiked the yen to the 158 range, burdening exporters. Furthermore, a BOJ rate hold led to afternoon profit-taking, which eventually shrank some of the Nikkei's early gains. Despite the soaring index, yesterday was a prime example of the index illusion. More than 59% of prime market equities actually declined, with 922 stocks ending in the red compared to just 612 advancers. The outsized weighting of a few semiconductor heavyweights completely masked the fact that for the majority of listed companies, it was a day of losses. Capital rotation was clearly visible across yesterday's 33 sector indices. Inflows concentrated in non-ferrous metals and electric machinery, while financials reversed previous slumps. Conversely, capital fled from defensive sectors like pharmaceuticals and land transport, as well as domestic cyclicals like real estate and retail, as investors sought funds for the high-flying tech sector. The heavy lifting for yesterday's 2,494-point surge was done by just 5 equities. Kioxia, iBiden, Kokusai Electric, Panasonic, and Murata Manufacturing all hit their daily limit high. This extreme capital concentration in the semiconductor sector acted as the primary engine driving the headline index to record levels. Buying momentum also extended to the growth market 250 index yesterday. Feature hit a limit high, while L'Oréal and global security expert reached new price highs. However, the sentiment was not universal. iGrid Solutions, a recent IPO from July 29th, declined despite the broader growth market trend, highlighting the selective nature of yesterday's rally. In corporate news from yesterday, Sojitz secured a 35-year contract for a new airport in Uzbekistan. Tech giants Line Yahoo and Rakuten both announced expanded AI functionalities for their mobile ecosystems. Additionally, Kawasaki Heavy began mass production of a world-class high-density hydraulic pump, signaling continued industrial innovation despite market volatility. The consumer sector also saw significant activity yesterday as companies refreshed brands to combat inflation. Higoromo and Morinaga announced new product variants, while Kobayashi Pharma updated its Keishamine skincare line. Kivito also revealed a commemorative ticket set for release in early August to mark a unique calendar date, focusing on local consumer engagement. To conclude, yesterday's rally was a highly localized phenomenon. While global forces acted as a massive upward magnet, domestic macro policy and poor market breadth revealed an underlying fragility. It was a day that belonged almost exclusively to the semiconductor sector, masking a broader market that is fundamentally contracting. Investors should remain wary of this top-heavy structure. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.